13. Using MACD for timing swing trades. Alright? Now, same thing with the RSI. I don't personally use this, but if you do use this, I will tell you the best way to use the MACD. Because the MACD, like the RSI, are all lagging indicators and none of them are perfect. And you want to get everything as perfect as possible when you're playing with a money game like this, right? So, if you want to go through these, take your time, read through all this, because I did definitely take my time to get all this information in for you. So, I want y'all to pause the video, and I want y'all to go through all these, right? Understand all of these, right? Okay. All right. Now to the charts, the fun part. To the fun part. You know, like all the words and all that. We like fun part. I'm going to take this 200 off because if we're going to use the MACD, we can't combine the MACD. Oh, I'm sorry. I'm in the wrong place. We can't combine the MACD with an entry indicator. We can't combine an entry indicator with another entry indicator. It does not work like that. It does not work like that. All right? All right. So this is how we would use the MACD. We would take a long approach. So I mean, you can use the 200 EMA as an entry indicator, or you can use it as a trend following indicator, right? But what I would actually do is I would, for instance, add a couple time frames on it. So we would come to the time frames, and we would add like the week. We would add the month, and you can add like the 6 to 12 month. All that. We will keep it real simple though for this video. All right, all right. This is what we'll do. Bare naked chart now. Bare naked chart. We get an entry signal here. So this is a buy here, right? Obviously we know what happened, but we're gonna buy here. But this is how we're going to test it. So we get the buy on this candle. Now we're gonna look at our. Oh my God, I want a minute chart. I did not mean to do that. I want to go to the daily chart. Sorry, chart. Sorry, I don't want to do that. I don't want to do that. Okay. So we're gonna come here. So we got a green candle here. All right. We're going to come here. So we get the first green tick on our MACD. We're going to come to the weekly chart. On the weekly chart, we have a green candle. So that's bullish momentum. On the month chart, we have a white candle. So I would not personally take this trade, but you could if you wanted to. I'm not. Now we have green momentum. You can make up rules for that, but I'm simple. We have the month is red, but the week is green. So we're not going to take that, right? And it probably end up being a, yeah, so ended up actually getting stopped out. All right, the next trade. Here we go. The next trade we have is here. So we get a green candle here. So we're gonna come back. Gonna come back. Green candle here, right? So we have an entry signal, but we're gonna check the weekly. On the weekly, we have a red candle, and on a monthly, we have a red candle. Now we wouldn't have took that trade, but if we go back to the daily and say, for instance, if we keep having all these red days, let's look for a sell signal, right? So we got the sell signal, right? So sell signal here. Let's go look at the weekly. On the weekly, red candle. On the monthly, green candle. Wow, it is an good workout, huh? This ain't ever gonna work out. But basically, this is the patience that's required when you're trading, right? This is when they say trade, that's what they mean by patience. All right, because you want to take the best trade possible. All right, got a green candle here. Well, we'll wait for the confirmation. So here, so we'll take this one. Bullet confirmation. Weekly, green. Okay, okay. Monthly, green. All right, so we would take this trade. We finally got the right trade entry confirmation. Okay, so what you could do is you can do entry here. Now we don't have no charts, so we don't know what's going on in the charts here, right? Remember, we're on Tesla. We don't know what's going on these charts. So if you want to be on the safe side, you could put your entry at the bottom of the swing low because we know that it's staying above the swing low, and the only time it came low is all the way back here on consolidate. So there's a real chance that this will not ever touch, and that's how you want it to be. And if you wanted to be on the safe side, you could target one profit target could be at like this, the close of this candle. That's a good target. You could do this swing high, like another half percentage target or something like that. We would obviously do a target. So we got consolidation here, so I would do like a target in the middle of here, or like probably the top of here between this gap. It's like right before we reach the gap. I'll put a target here. I'll put a target at this swing high. I will put a target here. And you just keep kind of going. You just want to take your profits as you're going. And then obviously we probably put like one up in here. It's like consolidation. I'll probably put one like in here. I'll probably this one, and then like another one probably at the top, and we just call it a day after this. All right. All right. So stop loss is here. So to make this red, so you know the stop loss. We entry here, so we'll make it white, so we know it's the entry. All right. So we enter on this candle. We got the green here. We got the weekly. So this is our entry. Our entry is here, right? So this is how we will use the MACD. This is our entry confirmation, right? So we would enter this trade, but we have to wait. On the weekly, so the longer time frame, are we green? Yes. Overall, the market is bullish on the weekly. On the monthly, so for the whole month, we have been green. A strong green candle at that. So that'll give me real good confluence that we should definitely be able to at least hit a couple of these targets. So on the day chart, we wait for our bullish candle, we'll close, then we enter. Then boom, what we do? Nothing really. Nothing. Start to drop down a little bit. So if you're a motion trader, you're probably scared. So we're chilling, then we go back to break even. You're probably like, oh my God, let's just get out. Oh, first target, boom, got hit, right? MACD is increasing. You see the MACD is actually spreading further, so more momentum is coming to the trade. So you don't want to be getting into a trade like say here at a breakout strategy or something. There's already momentum there. You want to be in a trade before the momentum happens so you catch the best part of the move. So we had one target, like going at the second target on the next candle. Second target is hit. So at this point, you want to start trailing your stop. So I like to trail my stop at every target. But after the second target, you definitely want to start trailing your stop. So I would trail my stop to the next swing low, which is like here. I would trade it here. Once we hit the third target, I'll probably come to break even, but I'm probably going to trail to this swing low and then to break even after the fourth target. Because that's a free trade after that. So we wait, hit the fourth target, then we're far enough to where I can go to break even. So we have a winning trade. We're going to come to break even on this trade. Now this is a free trade. Now how I would like to scale this is we're not going to leave it at break even because it could fall down and we don't want to give away all these profits. So after every target we hit from now on, we're going to trail it to one profit target. So once it come down to this profit target, we'll run off with that. You get what I'm saying? So we'll wait for it to hit. It hits. Boom. Hits two targets in one day. So we'll trail up two targets. So now we're actually, not only is our profit infinite, but we actually cap as much the amount of money we could actually gain. Well, not capped it, but we've actually put a better limit on the amount of money we can gain. So instead of gaining only this amount of profit potential, we actually gain more. So we gain between here and here, where it's just between here. So here, so we look for the next target. Hit the next target. It's just look how to the T is hitting our targets though. Do you see this? These are not random targets. I'm using price action to get these targets. You see this, right? The swing, swing, swing. This is the gap right above the. That's how this works. So we hit it. Now we trade up here. Now we want to give it room to pull back potentially, so you could get a little aggressive and probably put at the bottom of this candle. Because at this point, you're like, I'm good. We about to be hitting our thing soon. I want to start locking in as much profit as possible because we're about to hit our swing high. We expect it. This is a huge swing high, so we could get some real resistance in here. So I'm expecting it to hit here in reverse. We're going to see what happens. I don't remember what happened. I'm being 100% honest with you. We hit it. Okay, we might start reversing here. So we hit this target. We come here. I'll probably put it up in here because this will be a good consolidation range. We just consolidated, right? So we might hit here, but the way this wick looking, that's probably the end of the move here. Oh, it hits it. So we hit all our targets. And then it could, oh my. Bro, do I have to say anything else? Do I have to say anything else? We hit our last target before we even hit our stop loss. And then you see we even hit the stop loss to the T. We hit the stop loss to the T. Okay, bro. That's all I got. Look, if you don't understand from that, I don't know what else you want from me. Yeah, that's perfect. That is perfect. That's perfect. That's perfect. That's perfect. All right, man. That's day 13, dog. I'm speechless at that point. I ain't gonna lie. I'm a little surprised. You know what I'm saying? Not surprised. I mean, that's the nature of trade. You know, you get your confirmations on your other time frames. You get your entry signal, which is the MACD. So that's why you would never compare like the MACD with the 200 EMA. You could get an extra confirmation to put the 200, but we don't want to do all that. We want to keep trading as simple as possible. We want trading to be as simple as possible. So that's all we need. We're going to get on to the next